What's going on, guys? Nasty day in the stock market today, so we're going to go ahead and go over some levels. If you guys haven't traded a bear market before, welcome to a bear market. This is exactly what a bear market is. Whether you want to believe it or not, whether somebody on social media is telling you otherwise or not, this is a bear market, guys. I mean, it doesn't take a rocket scientist to, kind of dissect the puzzle that's going on here. But anytime stocks are trading below the 50-day, below the 50-day moving average and below the 200-day moving average, um, can you really be investing to the long side? Absolutely not. Maybe you can manage your position a little bit. Maybe you can average down on a longer term portfolio play, maybe a 5-10 year outlook. But as far as if you guys are trying to play shorter term, with inside 30 days on a trade, this is a bear market. Whether any way you want to draw it up here. So yesterday we know we had the big push higher. Nvda did try to close over, well, it did close, but over the 10-day moving average. Still had some room to go here. What I was kind of thinking going into today's session, if there was any kind of continuation and follow through from yesterday's last hour, taking out yesterday's highs, then kind of running these up into the 20-day moving average would have been a trade that I wanted to take. Obviously, by the time that I got up here in California on the Pacific Standard Time, markets were already down, and down pretty significantly in the pre-market. So, you had it, that's the luxury of being a trader. Now, is there luxuries and perks to being a long-term investor in the market 10, 15, 20 years? Absolutely. I'll never say that, a day trader who's been trading for a year is going to beat someone who's been in the market for 15 or 20 years and just, long and strong, baby. But, at the end of the day, on a shorter term time frame, on a year over year basis, typically, yes, the bulls are always in control. Yes, typically the market always goes up. But there's these points and times in history, and the Great Depression. You also got the COVID crash, which was very, very short lived, right? I mean, that we went on an absolute mega rally from the COVID, bear market, but and then you had the 2008 and dot-com bubble, right? So with all of those periods of time, you have to look at it as a whole. So yes, have the bulls been winning this fight in the long run? Of course, but you always do get bear markets. Bear markets can run between 2-3 months and 18 months, right? I mean, just go back to the dot-com bubble, just about 2 years before things got kicked off again. Just go back to the financial mortgage crisis. It was about 2 years between 2007 and 2008, really before things started to turn around in 2009. And if you really look at it, if we're technically 5 months, 6 months, 7 months into this, market cycle where, we're kind of getting into the bear market, well, then potentially, we can have, another 6 months of this kind of action. We can have another 12 months of this kind of action. And if you do not believe so, continue to buy the dip and continue to see what happens, right? Now, when you look at it from a little bit different lens, right, from a more so of a shorter term trader's perspective, like myself, I hold no positions long. It's something that I would like to get into, but right now I still feel that the market can come down. I don't really want to get caught up in this either. I want to, establish a bottom, start to reclaim some supply levels before I get long, or I want to get to that next level down. So one or the other. I don't want to just start buying things right now in no man's land. But if you look at it from, a trader's point of view, we can come into this market, whether the market is up, down, sideways, this, that, and the other, and we can always for sure find a trade. Versus if you're someone who's looking to, you need the stock to go up. You can't trade in a bear market. You can't trade when stocks are down. You're stuck sitting on your hands and you're stuck watching your portfolio bleed. It's one of the benefits of being a trader. Now, the downside of being a trader is you can lose money, just as quickly, if not more, if you do not know what you're doing. So, that's one thing that I really, pride myself on is technical analysis and just obeying the charts, following a very specific strategy and following a very particular set of trading rules that is not going to allow me to get crushed. Does that mean that I'm not going to lose? Of course not. Every trader loses. Every trader loses a lot, but it's how much you lose versus, how much you win is, going to depend on whether you're a consistent and profitable trader in the end. Now, versus when you're just kind of sitting on positions, well, you know, if you've bought Nvidia anytime within the last 30 days, you are down on your position. Okay. And if we kind of just scroll back a little bit, if you have bought Nvidia anywhere in the last 6 months, 7 months, you are down on your position. Now, unless you were starting a fresh, you know, unless you were averaging down and or you've had this stock for longer than a year, longer than 2 years, longer than 3 years, then maybe you're kind of at break even prices right now. Maybe you're down, you know, a cup of coffee or what. But you know, just looking at the chart, anybody who has bought anyone who bought here is crushed. Anybody who bought here is crushed. Anyone who maybe bought here, sold for a profit here, re-entered here, bought for a profit here, and is holding and reloaded here at the top thinking we're going for a breakout, you are now given back all of the gains that you just had from the prior 2 months. So pretty much what I'm trying to say is, if you kind of look at Nvidia's macro chart here, we are approaching a very, very thick line in the sand of 182. Okay. This line in the sand is going to go all the way back to 427. So 1, 2, 3, 4, 5, 6, 7, and tomorrow will be the 8th trading day, where now we are hovering around this 182. If Nvidia starts to lose 182, there's going to be significant room down. The next price target we're looking at is somewhere between 175 and 180 is being graceful. But you know, realistically, we're looking for about that 175 price target, and obviously reevaluate the trade from there, see what the overall market is doing. But anything to the long side here, you can see supply zone, supply zone, supply zone, supply zone, supply zone, supply zone, supply zone. So if you're looking to just buy something today because of a huge red day and kind of hold it, you know, you can potentially bounce to 193, get rejected, and then fall below 182. So it's about knowing how to manage your position if you are trying to play these things long. Now, if you're trying to play these things on a shorter term time frame, you're looking to day trade and this, that, and the other, you're going to need a strategy that's going to permit you and allow you to use technical analysis to be your friend. You want to be on the right side of the move. If we kind of just look at, and I'll just pull up a basic strategy that I tell a lot of newer traders, just take the first 30 minutes of the market and kind of sit on the sidelines. Let the price action do its thing. Let the chart kind of set up. Let's take the first hour's lows, the first hour's highs. Are those correlating with pre-market lows and pre-market highs? And if we're below or above either one of those, if we can confirm on that second hour candle, which for me is going to be the 7 a.m. candle, right? So in California, obviously Pacific Standard Time, the market's going to open at 6:30 a.m. and at 7 o'clock a.m. my first hour candle is going to close. So I'm going to be including that first 30 minutes of pre-market data, as well as the first opening bell 30 minutes worth of price action. Pretty much what you could have done today on Nvidia. If you're a short-term trader and you're okay with just, you know, taking a little piece of the pie instead of trying to eat the whole, you know, the whole table, right? If you kind of look at this, yes, was this an extended candle that we had here? Yes. Do a lot of people think that we can't go down farther, that this was already a massive rug pull from the market open between 200 all the way down to 193? Of course. But if you have a strategy and you're going to follow your rules, then you can say, you know what, if we lose the lows here of 193.60, I'm going to go ahead and take my short position. And as long as I stay under 50% of this this drop bar here, then I'm going to go ahead and hold my position. Now, if you don't know what that means about using 50% of the drop bar, or the run up bar, then just take the 5-day moving average, right? That's the green line on my screen. Take the 5-day moving average on the 1 hour time frame. If we close above the 5-day moving average, you cut your trade, you close up those small losses, and you go about your business. But as long as we stay under the 5-day moving average, you continue to hold this trade. Even if you would have just held this trade for 1 hour, you would have got in at 193.38, and it would have put in lows all the way down to 188. That's a 5-point move. Guys, do me a favor, take 10 contracts and get a 5-point move in your favor of contracts with the strike price of in the money, or one just right outside the money, and you tell me if you don't make money. So if that makes sense, guys, and you want more information on learning how to day trade, check the first link down in the description box below. If you guys would like to join my Discord, that link is also down in the description box below. Make sure, if you guys want more technical analysis, to subscribe to the YouTube channel, as well as giving me a thumbs up. I would highly appreciate that, and I'll see you guys on the next video.